Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for the second day of the Precious Metals and Critical Minerals Conference. The first presentation of the day is from American Battery Materials. Please note, you may submit questions for the presenters in the box to the left of the slides, and you can view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I'm very pleased to welcome David Graeber, he's the Chief Executive Officer, Sebastian Lux, he's the Chief Operating Officer, and Augustine Cabo, he's the Chief Financial Officer of American Battery Materials, which trades on the OTCID market under the symbol BLTH. Welcome, David, Sebastian, and Augustine.
Thank you, John, and thanks to everybody in the audience for getting together at the start of the day to learn about our project and what we're doing out in Utah. American Battery Materials is a critical mineral company focused on the production of lithium and magnesium chemical compounds. I'm going to run through a safe harbor statement for your edification. We are a public company. We have an S1 on file. All of our comments today are going to be limited to the disclosures that we have in our S1, which you can find at sec.gov. Company search American Battery Materials. Thanks very much. Next slide. Great. So as I mentioned, we're advancing what we expect will be a sustainable, environmentally conscious, critical mineral extraction business from ancient brines that are robust and broad in the state of Utah. This is a market with increasing demand, certainly within the United States. Our approach to this is to use direct lithium extraction to extract the lithium and magnesium molecules at the source. So it's clean, it's efficient, it's responsible. We don't have to deconstruct a mountain like the Thacker Pass, which comes with tailings and dust and other challenges, so you know that effectively is what the process is. Very similar, although albeit a little bit different than what Standard Lithium is doing in Arkansas. Demand is increasing, as you've been reading in the headlines. The demand for battery electric storage systems is breaking everybody's expectations to the upside, and timing for a transaction for us is timely. And we're excited about the future. Next slide.
All right.
Okay. So our land position, we've got about 14,000 acres in southeastern Utah. We're just about 25 miles from Moab, which has an airport. We initially started with 2,000 acres and expanded it, which Sebastian will get more into. But at this time, we have 743 placer claims, and historical parts per mil for magnesium and lithium are exceptional, which doesn't come as a surprise given all the work that's been done in this valley. So the Lisbon Valley, as I had said, 35 miles southeast of Moab. We're not adjacent to any national or state parks, which is favorable for a project. Other advantages are a rich industrial history. We've got 8 to 9 plugged and abandoned wells on the property, so the science already exists for us. Those are mostly oil and gas and 1 potash well, and it's a high desert climate, which is favorable for year-round access if you contrast that to trying to operate in northern Canada and elsewhere. There's a county road going through the property, might be a state road, which is exceptional, big cost savings for us. We have access to rail. We have high tension power lines. There's even a natural gas pipeline running up the county road. So in terms of infrastructure, that is invaluable. As far as government support, the state of Utah Division of Oil and Gas has been very cooperative. We've already got our drilling permit and we're ready to go. Next slide, please. So as I'd mentioned, high lithium and magnesium content in the region, significant infrastructure, and a friendly state legislature. The results we have are historical, going back many decades. There's activity in the area. That's industrial. We've got a copper mine down the street, about 1.5 miles. And the market for lithium molecules continues to grow globally. And as far as magnesium goes, there's virtually no U.S. production of it at this time. So the average lithium prices, as I'm sure you've been paying attention to, have gone from 8,000 a ton in June upwards of in excess of 20,000 a ton within the last month. This is a good time for us to get going. And so that's effectively it. We've got a terrific team of scientists along with the folks here today to lead the organization. Our focus is on U.S. growth and creating shareholder value with what to us looks like a property that's been proven out. So this is a fortuitous transition point for us as a company. Next slide, please. Okay, I'm going to hand it off to Sebastian. Understand, looking backwards, what we've done and where we're going. Most of 2025 was spent perfecting our S1, getting the appropriate disclosures. We were planning on doing a transaction in the fourth quarter. Obviously, the government shut down, so our ambitions are to transact very soon. We've also received our permit, and we applied for a $40 million grant under Title III under the Defense Production Act with the Department of War, and we're optimistic about that process. I'm going to hand it off to Sebastian, our president and COO, to talk about next year and more. Thanks.
Thanks, David. Welcome, everyone. Just to take you back a little bit before this very exciting past 2025 for us as we work to uplist to the New York Stock Exchange. We obtained our exploration permits. They were processed and are ready to go at the very end of 2024. This year was obviously an organizational year as we prepared to move forwards with our initial drilling to re-enter the wells that David talked about with a goal of getting our SK 1300 resource report. Our data is registered with the USGS, so we know it's there. We're looking to better understand the clastic layers and the geology underground in order to be able to develop our drill plan in most efficiently as possible. With that, obviously, we're bringing up a lot of brine. It's at that time that we'll be picking our DLE partners and the technology that we'll be using to extract magnesium and lithium. From there, we build a pilot plant so that we can dial in our brines that all brines are different all over the world, every location. But we have every expectation that the short list of DLE partners that we have right now will be able to work very well with what we've got. With that, we move more towards a production ready planning where we're bringing in more drilling and more reinjection wells, be able to develop our preliminary economic assessments and ultimately build towards our production plant towards the end of 2027, 2028. So let's go into very quickly on what we're talking about. We've mentioned DLE a number of times. Direct lithium extraction, the easiest way to think about it is your hard water salt system that you have in your house, and you're bringing up the brine. We are extracting the minerals that we don't want or that we want to keep, and then we are re-injecting the brine back into the ground. So it's a closed loop system that allows us to extract both magnesium and lithium selectively and return that water back into the ground where it came from. So a reduced water usage, obviously a much faster production cycle than some of the other technologies that are out there, be it hard rock, be it salars, and a much smaller footprint. The technology is not something that we're looking to have hundreds of acres worth of plant. We can actually scale it on a very small footprint itself. So Let's get to the next slide. Now, inside of DLE technology, there are different types. The one that we've identified to be the most efficient and the most commercially viable is adsorption. We are still open to other technologies, but right now this is where we're going towards. It doesn't have additional chemicals. We're not using it in a way that the environmental footprint would be difficult to manage in any way. We've got an extraction that is scalable in itself, so we can start small with a pilot plant and move to production by just adding additional modules to it. It's something that we're very excited about. DLE versus traditional methods, you may have seen in South America specifically, they use very large salars, evaporated ponds, another word for it, where you get some very fancy colors, but you're bringing up brines to the surface, you're concentrating them in a very arid environment, and ultimately you can end up with a very difficult environmental issue of having those concentrated brines above water tables. We don't have any of that. Again, we're bringing it up to the surface, we're shooting it back down after we've extracted the lithium and magnesium. We've got less water usage, less land requirements, very little waste as the salts and things can be re-injected. And ultimately, we've got a reduction in time to market as we're able to extract it very quickly. Now, of course, that comes with a cost, but the benefits of DLE technology is that we are not moving large amounts of rocks. We are not deconstructing a mountain, as David mentioned. Our capital intensity is lower than the clay sediment or even spodumene, and is dropping. We're seeing significant drops as more and more technology is coming to the market and proven out throughout the world. Our cash operating expenses are much lower, allowing us to work inside of a market environment, even with some depressed lithium prices that we've seen in the past. And with that trend increasing is obviously a positive, but we can still be operating even at the existing prices with considerable margin. All right, David, why don't I hand it back over to you so that we can discuss the markets and those opportunities.
Okay, great. Well, the one of greatest interest, certainly in the last 3 to 4 months, has been the demand coming from the battery electric storage market. I don't want to bore you with things you already know. It's all over the press, but the demand for power driven by AI and the technology boom that's going on right now, frankly, it's immeasurable. And those are Elon Musk's words, not mine. I don't think anybody's totally sure the amount of batteries that we're going to need to operate this new phase of technological revolution. The EV market globally continues to grow. Here in the US, we're at about 7% penetration. Europe and China are 30 and 50% penetration. That will continue to drive global demand. I think the U.S. is going to grow as well, but until infrastructure for charging systems becomes totally obvious, I think it'll be a little bit of a slow grower. However, you should remember, there is no domestic production of lithium today in the United States. Right? Albemarle's got a plant in Nevada. Last I checked, they had mothballed it. So to be an American producer is favorable for a whole bunch of different reasons. I'm not going to get into it, and it's not even politics. I'm sure you understand the logic. So limited supply, doing the correct things in Washington to support the growth of industrialization here in the United States and to protect us from depreciated prices from China. These are all things that are going to drive the market higher and make this a very viable, profitable future venture. So as I'd mentioned, U.S. demand by 2030, 400,000 tons. Production domestically is zero. So that's an opportunity for us in our mind. Ion battery market, lithium ion battery market is projected to grow 6-fold. That's a soft guess, could be a lot higher. Don't think it'll be lower based on the work we're doing, but I'm glad it finally showed up because this is something that's been discussed for years. and now it's becoming quite evident. And the price of lithium is responding accordingly. So those are the major growth drivers. There are effectively 75 new mines needed globally by 2035. I can tell you it takes a long time to get them set up. Time to market's better for a DLE technology. So we feel good about the pace of what we can do to meet the demand. And this is something you can refer to as well. As far as magnesium goes, there's zero domestic production of magnesium. And that's a major problem, both for defense and aerospace and also the automobile industry. So in the White House and the DOE and DOW on the list of critical minerals, magnesium is actually higher than lithium. And lithium's in the top quartile, but magnesium, there's no production. Everything is controlled by China. They control 95% of the world's production of it into metal ingots. That's going to change, and we're already working on solutions for that. So that's a supply problem, and the demand is already there. It's it's not as large as lithium, but it's a niche market, and it needs to be domesticated and part of our industrial base here. And we're working assiduously to solve for that and talking to potential partners now. As I mentioned, heavy import reliance and the critical mineral status we discussed. So, once again, defense, automotive, aerospace. If there's no magnesium for Ford Motor Company, there are no cars coming off the line. And that's verbatim, from people we talked to within the industrial complex. So this is getting solved for. I think they're shoring things up short term, but long term, with the legislation that's going into place, the acceleration of permitting, which passed in Congress, I believe, a few weeks ago. This is time to market's going to be what an investor would want it to be finally. So I'm happy to see that, and I think the industry is going to respond well with that. Additionally, so that is that we put in for a $40 million grant. Initially, we were putting in for just lithium, and they said, "Well, hold on a second, you've got a lot of something that we need, so let's add that." China basically undercut the entire industry in the United States. That's going to come back to life. We want to be a player in that space. Okay, so that's we're hoping to hear over the next 6 months. It'll hopefully it'll work out. We're told we're on the short list, and it comes out nicely, but remains to be seen. They're busy doing a lot of big deals right now. There are probably 80 other relevant applications in the pile that they need to get to. And our understanding is that the DOW is beginning to move down and look at additional resources here domestically to be helpful to. Our advisory team and leadership, we've already introduced ourselves. I'm a lead investor in the company. I've invested over $4 million in the business, which is a meaningful part of what I have. Couldn't be more happy about it, given the momentum we're seeing right now. Sebastian is an investor in the company. We go back 30 years. His background is in logistics and supply chain. He's a very capable operator. Scott Evanzino, little time at Schlumberger, also have known him 30 years. He was actually my undergraduate research professor in geology when I took it down in New Orleans at Tulane years ago. He's excited and has been doing a ton of work on subsurface mapping. Augustin, invaluable. He's a chartered financial analyst. He comes from Argentina, grew up in Buenos Aires province, and has just been terrific getting everything organized for us. We have a PhD in inorganic chemistry, Ryan Zarkesh, who's out of the Denver area. He was a founder at Lilac Solutions. He'll be on our bench full time. Can't wait. Brad Peak is a qualified person. He wrote our tech report. Chris McClanahan, I've also known 30 years. He's drilled over 10,000 wells. He's wrote a check into the company. He's out of New Orleans and Houston. Knows everything about drilling, and I think he even offered to drive some equipment by himself all the way from Houston that he's got dry racked. So Chris is going to be part of our team. Reza Asani wrote the entire definitive feasibility study for Anson Resources, which is 50 miles to our north. Feels great about the project. We gave him some equity. We're looking forward to activating him and getting to business. So that's the team, a lot of experience, specific experience in this region, in this valley. And I said to him, I think we can do 10,000 tons a year. He said, yeah, absolutely. So when you hear that from somebody that's been at this for decades, who's an engineer, who was at Worley for 16 years, feels good. And yeah, so that's the team, and it's growing. Board of directors, very senior investment bankers on Wall Street, attorneys, helpful for corporate governance, folks who've had, worked in the White House, folks from the buy side, we got the sell side, and of course, we have our brain surgeon, who's one of our lead investors and a close friend who's been just terrific, helping support the company along the trail here, Dr. Lipson. Okay, with that, I'm going to hand off to Agustin, and he can tell you a little bit about the market and what's going on with lithium molecules.
Thank you, David. And yes, we're excited about this opportunity and the moment of the lithium market. Over the last 7 months, the lithium market has been showing extremely positive momentum since June of last year, when we saw the bottom of the last down cycle. Lithium carbonate prices have more than doubled, with lithium equities showing a similar performance. What's different this time, this new upcycle, is the explosive growth of battery energy storage systems due to solar installations, data centers, and AI. So to give you an idea of the magnitude, back in 2022, this demand represented only 6% of the total lithium demand. And last year, it was already at 23%. And multiple analysts, Wall Street analysts, and industry analysts are expecting this number to reach 30% of the total lithium demand by the end of the decade. All this additional demand from battery energy storage and other applications, such as heavy trucks, are expected to pull the lithium market into a deficit over the next few years. And there's additional tailwinds, like the robust support of the US government to the critical minerals industry, with grants, direct equity investments into projects, the recently announced critical mineral stockpile. And also there's some challenges on the supply side with mine suspensions in China and a more stringent permitting process to address some environmental issues. So we believe that all these factors together present a very supportive environment to develop our project. And there's multiple investment banks that have been raising their price estimates. So we are very optimistic about the next few years for the company and for the lithium market. So I hand it back to David.
Thank you
to finish.
Yeah, we want to get to Q&A as well. We've got a bunch of questions coming in. We want to be responsive. I'll do this fast. I'm sorry. All right, here we go. All right, so slide 19. I think we pretty much touched on all this. Why don't we go to Q&A, because the questions are pretty robust here. Some we've answered. If we've answered it already, I'm going to skip them. Alain, thank you for your questions. How many tons of brine and grade? Tons of brine, we're told we have an ocean of it. I think if you look at the valley, it's anywhere from 75 to 350, depending on where you are. But ultimately, this is really a volume game in terms of brine. And that's the answer. We're not defining what the size of the resource is yet, because we're not allowed to. We have a pretty good idea, and we're optimistic. But other than that, I can't speak to it. I can only speak to what's in the S1. I'm sorry. Okay, so going upwards, lithium prices continue to rise. Perhaps we think that what's important to us is that they're at a price where we can make a really attractive margin. We're on the low end of the cost curve. Our OPEX per ton, as it stated, was 4,500. So what happens when prices go down is supply shuts off, right? But we're on the low end of the cost curve. We can keep going. In an environment where it's at 12 or 14,000, we can make money in this economic model. I can't portend where lithium is going to go. I don't think it's going to have the type of volatility it had in 2023, but we feel pretty good about kind of high teens, mid-teens prices to be highly productive and get this project financed correctly. What's driving the price in lithium? Best demand, battery electric storage systems, 100%. Moving forward, yeah, not sure what the price is going to be. We have tons of research out there projecting it. We're sticking with that. Do we need a downstream refinery? We want to take the lithium molecules to a carbonate, and we're planning on doing that on site. Our plan is not to do chloride and ship it. We understand the costs involved, and we know who the service providers are, and we have a tremendous amount of acreage to ideally do what we want with permitting. Value contribution, magnesium versus lithium, tough to say. I think that, we probably have enough magnesium to meet the national demand just based on the volume of it. In terms of how much are we going to produce, I think that'll be a real-time decision when we know who our customers are and what they require. Okay. Yeah, magnesium extraction is synergistic with DLE process of extracting lithium. They take the lithium out first, and then we move to magnesium. Milestones for 26, and do you have capital in place to support these initiatives? Thanks for the question, John. Milestones are to execute an uplist transaction to the NYSE. We've already been approved to list on the NYSE by the NYSE. We've cleared SEC comments. I think what's on the cover of our deal is 10 million or more. So that is it. We're going to refile. We're going to file our 10K here soon. That's the next gating item to, ideally start a roadshow. How much spodumene are you thinking of shipping out in tons per year? We are a brine extraction company. We're not touching spodumene. That is stone, and the CapEx is much higher. So our ambition ultimately is to build a 10,000 TPA plant, start at 3 to 5. Ideally, I'd like to, grow organically with profits, but, that all depends on future capital decisions and business economics and everything else that goes into growth decisions. And that's pretty much it with 3 minutes left. If anybody has any other questions, please drop them in. But I think that pretty much does it. We wanted to give time for Q&A, so we tightened things up a little bit.
All right. Well, thank you, David. If you have any additional questions, just pass it on. We'll make sure to get to those. If you have follow-ups to the ones that you sent, obviously we're limited in time. But thank you, everybody, for joining us. We look forward to ongoing conversations with you. We're available for additional meetings if you like. And if not, please reach out via our email that's on the screen now. Thank you, and have a great day. Stay warm.
Yep.
For those who need it.
Take care.